Hello, this is Bear from Wave. How's it going? Here's a video on Polkadot, as you guys can probably tell from the title. So as always, we're gonna look at dotusd. We'll see what's happening, what could be happening, and what we could expect in the near-term future. So here we have the chart of Polkadot in front of us. So I've been tracking down this coin for quite a while. It's almost been a year. I was able personally to get into this. It was last summer around July at $12. I was calling the low, and we did have a low, but apparently it looks like it was just a wave A, or if not wave A, the first initial move to the downside. So what we can see now is that we could count 1, 2, 3, 4, and 5. And then I would say that if we just focus on what's happening in terms of price swings on a larger scale, I would say that we see down, up, down. So that, of course, looks like a three-wave move. And we know that 3 is corrective. What does it mean? It means that if this is a three-way move, as it looks like, we will see further downside. So let me delete this. So the question, of course, is when will we see further upside? Well, that is a golden question, and we're gonna answer. We're gonna at least try to answer that during today's video. So here, you could argue this wave A looks like a three-wave move. If it's not a three-wave move, then wave B couldn't break the eye of wave 5 of the same degree. So it has to be 3, and I can count it as 3. So we are on a daily chart, and let me get into the 4-hour chart. Let's see what we have here. So here, as you can see, I'm counting as 1, 2, 3, 4, 5 for wave A. Let me show you that. 1, 2, 3, 4, and 5 for wave A. 3 waves up for wave B. And then again, 1, 2, 3, 4, and 5 for wave C of higher degree minor wave A. From there, please let me know if you see something else. This count doesn't mean that it has to be correct. It could be, but it's not written anywhere that it is the correct count. So here I see up, sideways, up into triangle. The nice thing about this is that if we measure wave C compared to A, look at how close to the 61.8, so the golden ratio, that was. That's quite remarkable in my opinion. For those who are not a fan of Elliott and of course Fibonacci, then I would start thinking about that, because look at this. So let's pretend we entered during this wave B to the upside. What could have been our targets? So let's assume, let me help you visualize that. Let's assume we entered here, we placed quite the protective stop loss. What could have been the target? Well, if that was wave A and B, we know that first target should be the 61.8. So we know that first target should be around here. So when we start getting close to this point, we could, if not close the entire position, we could at least take some profits off the table. And then as you can see, it went back down. So that was just a little trick I wanted to show you guys. That of course it's taught within VVS. If you don't know about VVS, check out the link in the description, and you can join our public Discord as well. So also the link is in the description for the Discord. Anyways, moving on, that as I say looks like a three-wave move. Now it would be interesting as well for myself as well to understand what's going on here, because what my eyes see is down, up, down, up. So I would expect downside. What I do know, at least what I think I know, is that the move from January 24th lows is corrective. That's a three-wave move. Count in S5, I challenge you to count in S5. It just, how would you fit if I was there? I don't think you count in S5. I will count in as A, B, and C. And within wave C, you can see a little ending diagonal. You can see. Can you see it? I'd argue that is an ending diagonal in wave C. Moving on. The question, as I said, is what is this? One thing that I like you to notice is how the 200 EMA, the purplish line, acted as resistance several times. So that could have been used as a trade confluence. Let's say here you measure, let me mark it up. Let's say this is wave. We just mentioned that it is a three-wave move. We know that first target for wave C is 0.618, and we know the second target and most common target is equality. So as you can see here, it reached equality, so it entered what I call the golden box, which would be an area somewhere here. I'm not going to reveal all my secrets. And what we could have done is we could have looked at this, said, okay, it reacted from equality, possible it's completed. Let's wait for a move down. Here we have a move down. Let's wait for a pullback that has to be in three wave, A, B, C. Let's wait for confirmation here on the 200 EMA, and then we could have taken something like this. Of course, it's easy to say it after it happened. I know, guys, you can say that in the comments. I'm just trying to help you for some, since I get asked that a lot. How do you place your entries? What are your entries criteria? These are, of course, some of them, not all of them. They're just a little part of them. But hope it helps, guys, at least. So that could have been a nice setup. So you guys get an idea of how I trade. At least I always look for relationships between waves in terms of length. So moving on. Here, as I said, the question is, what is this? Because if this is wave 3, the problem with this is that it's quite a big problem, because if we place, what I could do is 1, 2. This looks a bit ugly. So either this wave 2 is completed somewhere else. Let's say here. So it looks like a complex. It could be W, X, Y, or it could be actually a triple combo. You could argue it's something like this. ABC, some kind of ABC, AB diagonal in C, ABC, ABC, ABC. It's possible. 5 is down to wave 3, up for 4, and now down for 5. So that's a possibility. Once again, we just did it here. Now we would like to know, of course, where wave C could end. Sorry, let me fix it over here. Don't like to have all things messed up. So as I did literally 2 minutes ago, we want to measure wave C compared to wave A. So once again, we know 61.8 would be the first target, and then look for equality. 61.8 was the first target. We added a reaction from it, acted as resistance. So that, if you think about it, this line here is a 61.8. Let's see if I can do this. I can show it on the right, and so that you guys labels right. Oh, nice. So you guys can see it. This is 1.8. This was the previous trade, so we could have used that as additional confluence. So you guys get an idea of how many things it's good to look at. And these are all within the Elliott theory. It's not something additional to the Elliott theory, which of course I also utilize. So further downside here, and as we just said, 61.8 was reached and used as resistance. So now the next target would be equality, which is a bit shy of $12. In addition to that, let's see if I gotta get back to the daily chart to show you that. If we measure Fib retracement of wave 1, so we get an idea where wave 2 could end, of intermediate degree, the red one, 38.2 is around $13. So we know that anywhere between here, I would say, we could get some support. So that's what I will look for. That's what I will as well look for. Let me delete this. And then, so I would just basically wait for a reaction at that point. So here it looks like this is going to go much lower. Looks like this is 1, 2, and we will get something like this. So I would expect the upcoming week to be quite bearish. And yeah, don't be hopeful, because hope is a very bad thing in this industry. Just trade what you see and try to not think about what you want to see, but what you are actually looking at. Hope you guys understand what I'm saying by that. So as always, that's it for me today. Let me know in the comments if you'd like me to bring something else to the channel, what you'd like me to analyze, as well as let me know what you think about the count. Please, all I'm asking for is a like, and please subscribe if you're not already, if you don't want to miss out on the next opportunity. Thanks for joining, and I'll see you in the next one.